Hello, everybody. It is Wednesday, 4th of November, 2009. And the mainstream at it again with the Fed Minutes with Ben Bernanke. He came on stating that he's expressing growing confidence that the economic recovery is building right now. He's keeping rates at the 25 basis points or 0 to 25 basis point, which is 1/4%. And he also stated that $175 billion would be bought in government-backed debt. So, or companies. I guess this is good news, but they're limited. They said they wanted to buy $200 billion. They can only buy $175. Interesting. Okay. But when you read down on this article, which is the first one, the more info, it states a private report when showing U.S. companies cut payrolls at the slowest pace in more than a year may add a sense that the economic numbers are moving into the right direction. Interesting. Unemployment still going higher. When it was 8%, 7%, they were still stating that it was negative numbers. It was not good. That's what they were stating. And we are seeing improvements. Myself, if it wasn't good at 8% and it falls back to 9.9%, then technically or theoretically speaking, it should be better but still not good. It's like stocks, for example. If they keep going down 12 days in a row, and the 12th day, it barely lost. It lost 1/4 or 1/10%, where every day before it was between 1 and 5. That's improvements. It's still down. And even on the next day, you would see the stock markets go up maybe 6%, and you'd be thinking a recovery, as nothing goes straight up or straight down. However, when we haven't even seen unemployment retrace anything since it started to move higher, to me that's not signs. When we can start to get that number lower and lower, then maybe we could start to say this is an indicator. But it's very difficult, in my opinion, for them to keep giving out this information they need to try to hide the public from what's really going on. I've been noticing that when I've been seeing these polls on mainstream media pages, when they ask questions like, do you think that there is going to be a recovery coming? And you see the majority still say no. And majority, of course, more than said yes. That to me is really stating that people are starting to wake up, other than it's just so obvious. And they're saying right now that they expect unemployment to top around the 10% mark. It's 9.8% now. 9.8% now. We cut 207,000 jobs, which was 227,000 last month, and was revised from 254. So they revised the 254, the number last month, down to 227. Because they have very nice little indicators for that, apparently. And that is apparently positive numbers. And they're predicting that 10% area to be a top, maybe 10.3, 10.4, in that area there. And you now start to think to yourself, okay, what is it going to take to top out at 10%? Maybe it would, I don't know, come on, there's got to be some way. Well, if you... No. Oh, I got it. Okay. You revise the numbers and get people off of unemployment benefits. This way, when we have the U6 numbers, which are now at around 16, 17%, when they go in the 25, 30% range and unemployment is at 10.3%, they can make more stories. And this way, people will still... no. I mean, if people are starting to get the picture now, voting 60-something% that there won't be a recovery, 20-something% that there will be, and about 10% undecided, what's that going to say in a few months when the number is roughly 25-30%. Because as I've been saying on here, the fundamentals is guaranteed. When you run a system that the Federal Reserve has a monopolization on the money supply, it's guaranteed as long as there is interest and the debts need to be repaid back, which is exactly the case that is going on. Credit card debts keep getting higher. It's so difficult to have a regular business, a small business these days in comparison to what it was before. The lease expenses for properties are so huge, and so many different little expenses add up. And one thing that I've been a big fan or a big advocate on is a lot of little things add up to one big thing. And when you have all these little costs, that is more destructive than one massive cost coming in. Which is why it's such a big situation that we have it set up the way that we do on the monetary system. And I've been thinking a lot about the stocks and the dollar on the inverse relationship. I'm noticing now that the mainstream is starting to pick that up more, saying this more. And I don't watch much mainstream, and maybe because I've watched a little more the last couple weeks, I'm starting to pick up on it. I don't know, but they are stating that they work inverse, meaning in my mind that it's going to stop happening this way, because when they pick up on it, that's when things change. It's now at the same point, it just may have taken them this long to figure it out, where a lot of the traders have been figuring this out for months, if not even a year or so by now, that they have trade inverse. So is it going to stay this way? Well, I look at what would happen on a dollar crash. Looking at the biggest days when it ultimately breaks below 70, what's a big down percent for a day going to be for the dollar? I've seen days where the dollar's lost a couple percent in a day. Is it capable of losing 4 or 5% in one single day? I'd have to say it would definitely be possible with a heck of a lot of panic that's going on. So in a day where we would say, for example, have a dollar rise 5%, do you really think that stocks are going to go up like 4, 5, 6, 7% when a lot of panic on a bad dollar is on the news? Because when a dollar loses 1%, not everybody really notices that much. But when it loses 5, that's when people would start to notice. Because you normally see the dollar lose 0.5%, hardly anybody realizes it, and the stocks are up 2. That's been the case. But if it is a 5% down day, could it not be 2-3% down for stocks because of panic selling? And if that's the case, what would gold be doing? Would gold have that $100 update that a lot of people would not be surprised to happen? These are the type of things that I think of when I'm thinking, to try to determine what the possible and likely causes for things to happen. But nonetheless, I do believe that the dollar will have these big falling days. There might be a significant rally before it happens, and then maybe there might not be. No one really has a crystal ball except for the ones who are creating it, or the ones behind the scenes. And to think that there wasn't people behind the scenes that knew that, okay, the Fed's going to speak today, which is most likely going to cause a big market fall. We'll get those rallies back, and then a fall at the end of the day, and then hit the short, hit the long, and then hit the short again. You think anyone did that because they knew? I would have to say that it would be not if they knew, but how many did know. And that's just my personal opinion, and I could be wrong, and if I am, great, but I really don't think that I am. I'm going to end this video at this. Thank you all for watching. Peace and light.